Welcome to the Credit Concept Podcast. My name is Credit Coach Nicole Scott. I am going to be your host for today's show where we talk about the concept of credit, the importance of credit utilization, okay? How to properly use our credit cards. This is just the intro. We're just literally scratching the surface when I talk about the utilization. I'm going to talk about also some budgeting tools that have helped me and some of my clients get my act together. So if you are interested in learning more about personal credit and business credit, how to leverage credit, you are definitely in the right place. My name is Credit Coach Nicole Scott. You can also follow me on Instagram and YouTube at Credit Coach Nicole Scott, where I put out different training videos to help you guys understand how to have the best credit possible. So make sure that you have subscribed and follow us on all of the podcast platforms because this podcast is new and your feedback is needed. Again, if you guys have any additional comments, you can also send us an email, support@creditcoachpros.com, and we'll put all of this information in the description for you guys as well. So today we are going to be talking about basically credit card utilization. Okay, this is podcast number 3. So if you haven't watched the 2 prior episodes, make sure that you tap in and watch those. But today we're going to be talking about credit utilization and how that really ties into the concept of credit and kind of the concept behind credit utilization, how we should be budgeting with our credit cards, how we should be budgeting, period. And, what are the best numbers to stay at for the credit card utilization? And, I had a few clients and listeners ask me, hey, how do loans play a part in my credit utilization? So we're going to get into that today, folks. And if you have not by now, make sure that you show some love, send us a like, a comment, and let us know if you have found value in the topics that we are talking about. So let's get into it. So credit utilization, our goal with credit utilization is to keep our credit card balances extremely low to begin with. A lot of us that are, rebuilding credit, reestablishing credit, trying to get our credit score above 700 or a higher number. One thing that I have noticed after looking at so many credit reports is people keep their credit card balances too high. Now, sometimes it's okay to have a bit of a balance, but that balance is going to be a direct reflection on what is your credit limit. Now, if your credit limit is only $200, then you have to consider what is 10% of $200. Well, it's $20. So that's nothing. We can spend $20 on the dollar menu at some of these fast food restaurants, if there's even such a thing anymore. I mean, it really racks up fast these days. So we have to be mindful of that. Now, if we have a credit card that has a $20,000 limit, then of course we're going to have a lot more wiggle room. We can afford to keep a $2,000 balance. So it's all going to be dependent upon what your credit limit is as far as what you should allow your balance to be on your credit cards. Okay. So I know when a lot of people are doing their research and they're looking online to see how they can improve their credit, one of the things that they might come across is, hey, you need to keep your credit utilization below 30%. Well, I'm going to be the first one to tell you, and probably not the last. 30% is way too high. And I did some, testing, if you will, on myself. And I allowed my personal credit utilization to go up to 27%. And guess what happened? It actually dropped my credit score over 70 points. So it is way too high, especially when you're first starting to develop relationships with banks and financial institutions. You want to make sure that you're keeping your credit utilization extremely low. And in fact, if you are getting credit cards with like secured credit cards, don't even use them. They're still going to report positive. They're still going to report an on-time payment, even if you do not need to use them. They already have your money, right? The goal is to just let them sit and marinate, especially if they're with a company that don't graduate. Some secure cards, I would say it's okay to use them. Discover It is a great secure card to use responsibly, less than 10% of the balance. Navy Federal has a secured card. You can use them for less than 10% of the balance. Or if you are responsible enough to charge it, even max it out and pay it off almost immediately and pay it off before the statement date, which is the date that they report, the they being the creditor. The statement date is the date that the creditor is going to report your account information to the credit bureaus. Now, typically creditors, banks, financial institutions, your credit cards, your loan companies, they're only going to report your account updates once per month, and that's going to be on your statement date. So whatever your account, balance is as of the statement date, that is the balance that is going to be reported to the credit bureaus. So you can control that balance by paying off your credit card debt 3 business days prior to the statement date. Okay. And if you don't know what your statement date is, you can call the creditor and ask them, what is my statement date? Your statement date is also going to be known as the closing date or the close date. So those are all the same thing. So you have your close date, statement date, same thing. You have your bill due date, which is a totally different date. This is the date that your payment is actually due, right? But if you pay your balance by your statement date, you won't have a balance due on your due date because you would have already paid it. And then the third date that you got to be concerned with is, hey, when do these people update to the credit bureaus? Like, for example, Discover. They report the account information on the statement date. Capital One, they're going to report your account information, which is going to be as of the statement date. They report 3 business days after the statement date. So, for example, like when you're buying TRADELINES are going to report to your credit about 10 business days after the statement date, because that's when these creditors report account updates. Account information is going to be as of the statement date. So you can expect to see updates within 10 business days, which is going to be reported to the major credit bureaus, Experian, Equifax, and TransUnion. So that's how we can control our, utilization, because our goal, the magic number, and you guys want to make note of this, the magic number to keep your credit utilization is between 2 and 6%. And don't feel like you have to use your credit cards, because you certainly don't. You want to make sure that you are using your cards responsibly and wisely. You never want to have a credit card balance due when you're applying for new credit. You want to make sure that when you are going for funding, applying for credit cards, applying for new credit, your current credit card balances, you don't have a balance on more than like 2 credit cards, okay, per the credit bureaus. You might say, well, I paid it off. Well, it hasn't updated. So don't apply for anything until it actually updates to the credit bureaus, because whatever the credit bureaus have on file, that's what the creditors are going to get when they pull your credit. You might say, well, I already paid that off, but it hasn't updated. So you got to wait and make sure that your account information has updated before you go after, funding or new credit cards, just for the best approval odds, right? Because I have literally had clients that have been denied by banks saying, well, you have balances on too many credit cards. Now, they're not going to flat out come out and tell you that, but we had to call and find out why, because their credit score was really good, but they straight up said, you have balances on too many cards. So you only want to have a balance on maybe 2 cards. If you have a low amount of credit open, you want to open up more credit cards. So that way you have more trade lines, because a credit card is a trade line. It's a primary trade line. And we'll talk about trade lines in another show. But like I said, you want to make sure that your credit utilization is below 10%. Now let's talk about some of the basic concepts behind the credit utilization. Now, credit utilization is 30% of your credit score, about 30% of your credit score. So between credit utilization being 30% and the payment history being about 35%, you're already at 65% of what your credit score is made up by things that you have control over. Paying your bills on time, and we talked about that in the credit concept, the concept of credit podcast number 2. But in this podcast, we're talking about credit utilization, which again, 30% of your credit score is made up from what your credit utilization is. And credit utilization is only based on your credit cards, not loans. So there is a difference. When you have loans that are, auto loans, student loans, personal loans, rent, that does not count towards your credit utilization. Your credit utilization is made up of credit cards. So it's very important for you to have enough credit cards on your credit profile for you to generate a strong credit score and strong credit profile. Now, you should have a goal of having between 10 and 20 positive trade lines listed on your credit profile. And every credit card that's in your name, that is considered a primary trade line. So, for credit cards, I would say, anywhere from 6 or more credit cards, the more the better. Between 6 and 20, I think I have at least 20 credit cards, but I have a very strong credit score. One of my credit scores is over an 800 because of the fact that I built such a strong credit profile. Now, keep in mind, what credit cards do we use? What credit cards are we just using as stepping stones? So when we're first developing credit, it's important for us to understand that these secured credit cards are for a purpose. Okay, they're not to be used. They are simply a test, and they are used as a stepping stone for us to develop some, payment history, have some primary trade lines, and just show our ability to repay back debt as agreed. Because when you go and apply for something like a mortgage, they're going to want to see that you have a couple credit cards that are in your name that have been paid as agreed, zero balance, no late payments. So that's something that's going to help strengthen your credit profile by just showing your ability to repay back the debt as agreed, manage your credit properly. And that's what credit's all about. The concept behind it is to show that you have a 2-year history where you don't have any late payments, and of course you have a low credit card balance. And again, when you're going to apply for anything, make sure that your credit card balances are as low as possible and that you don't have credit card balances on more than a couple cards. If you only have 2 cards, you probably only want to have a balance on 1. If you only have 5 cards, balance maybe on 2. But the secure cards don't need to be used, and I talk about this a lot. The concept behind secured credit cards is to help you build your credit score and get better credit cards with better banks and financial institutions, so that way you can leverage your credit. But if you're constantly running up balances with these secured credit cards, it just simply doesn't look good. So why do you need to use their money? In the grand scheme of things, your secured credit cards are probably no more than $1,000 limit, right? But a lot of people, they don't know how to properly use credit cards. As soon as they use a credit card, they go like it's burning a hole in their pocket, and they just got to use it, and they got to use it. And before they know it, it's maxed out. So you got to have some control over your spending habits. And that kind of leads me to the next topic that I wanted to, cover today, which is a budget. Put together a spending budget for the month, all of the money in, all of the money out. Okay. And it can be as simple as, what categories do we need to spend money on? Housing, food, utilities, what is my cell phone bill? What are some of the activities that we're going to be doing this month that are going to cost us? Put together a budget, because I know a lot of people that need to simply shut down and close their Uber Eats, their DoorDash accounts, all of these food delivery places. Just go ahead and close the account, because every time you order anything from these places, it's $50, okay? And it's just a waste of money. And typically it's not even good. You get the wrong order, they mess up your order, God forbid you make a change to it. The food just isn't good. So what I recommend to people is get a food budget together, make a menu of, what meals you're going to prepare, buy groceries at at the store. Try to budget the groceries because you can use coupons. You can use what deals are in your local grocery store. Go based on what's the best budget. Sometimes we have to go to multiple stores. I always recommend buying meat in bulk at places like Costco so you can get chicken, beef, steak, whatever, meat or products that you can freeze, you can buy in bulk, so it's a little bit cheaper and you can better budget, and you can have a menu that you follow every week so you're not spending so much unnecessary money on food and DoorDash and all this crap that's just never good at the end of the day anyways. And I always get disappointed. I always get the wrong order, they always mess up, and the food's never good. So I finally said, the heck with this. I'm just going to be, cooking my own food. And, I became a great cook, so we really got to just budget our spending habits as far as clothing, supplies, and things. Anything that you can buy secondhand, don't be ashamed to buy secondhand. There are thrift stores out there that have really good clothing, that literally get clothing from major brands like Macy's that still have the tags on them. So don't feel ashamed if you buy clothes secondhand from a thrift store. Sometimes, our budget does not permit us to go to Macy's or to go to some of these name brand stores and buy brand new clothes. But if you can go and get similar clothing at Goodwill or a thrift shop for, a fraction of the cost, great, because we sometimes don't need to be spending our money on things that are just unnecessary. I had a baby a few years ago. A lot of the stuff that I bought for my child was secondhand. I can imagine buying that type of stuff that we use for such a short period of time, all brand new. I probably would have gone, into debt because babies use things for such a short period of time. There's so many people selling secondhand items that have been barely used on Facebook Marketplace, on, places like OfferUp, and there's so many different apps that you can buy secondhand, and, thrift stores that you can buy secondhand. So make sure that you check that out prior to buying things brand new. See if you can have somebody else. And this goes back to using other people's money, OPM. Have them pay full price for something, let you pay a fraction of the price for something, because you need to focus on your credit profile based on what your credit goals are going to be. The concept behind credit is having less debt, less credit card debt being reported. Now, other debt like loan debt, installment loan debt, does affect your overall debt to income when purchasing something like a home, right? But we're talking about just the credit card utilization. We want to keep that as low as possible. And like I said, you want to have a goal of trying to get between, 6 to 20 credit card. The more lines of credit that you have on your credit profile, the stronger of a credit profile you are going to have. And the more that you can manage your credit, meaning you don't feel like you have to use every single credit card, you are not using your credit cards for unnecessary expenses. You basically are using your credit cards as if this cash is coming directly out of your bank account, and understanding that you have to pay this money back and you have to pay it back on time. So you need to budget accordingly for that. And if that means you sitting down and writing out what comes in and what goes out every month on something as simple as a notepad. For those of you that want to get more fancy, do it on a spreadsheet. But we just got to get that information down so we can visualize in our head, hey, these are some of the things that I'm spending unnecessary money on. These are some of the expenses that I'm literally wasting. Another thing is to look at your interest rates. Auto loan interest rates, student loan interest rates, any type of loan that you have, you want to find out what the interest rate is and see if there's a way that you can refinance that loan to get a lower interest rate, which is going to overall lower your payment and save you money that you were spending on unnecessary interest every single month. So again, guys, I hope that you found value in today's Credit Concept podcast, where we talked about credit card utilization, budgets, and the difference between what credit card debt is and what actual loan debt is. My name is Credit Coach Nicole Scott. I am your host on the Credit Concept podcast. And if you need any additional information, head to the description where we've left a bunch of links for you. Follow me on YouTube and Instagram at Credit Coach Nicole Scott and everywhere where podcasts are broadcasted. Thank you for listening. Have a great day.